So the final part of the question is to calculate the corporation tax liability. So to do this, we're going to take what we worked out in part B, remembering you get all your own figure marks, and we're going to add to it any other income that Ballpoint might have in order to work out the tax. So if we go back up here to what we worked out in part B and carry on to calculate the corporation tax. So line 1 will be your trade profit. So that will be whatever you had up here, 1,222,612. And I need to add to that any other income that I might have. So if we go up here to see what we disallowed, well, the dividends were disallowed because they're exempt, but the interest is going to be taxable. So that will be what we called our non-trade loan relationship. Remember, that's made up of your interest that you've received, which is the 70,000, minus any non-trade interest that you've paid. And we had some of that, didn't we, in this question here? So we're disallowing it because it's not trade, but it is still taxable. We can net off the received and the payment. So we're going to take off that 10,000, giving us a net loan interest from non-trading activities of 60,000. We have no other income, so we've just got those qualifying charitable donations. So that's where we've disallowed anything up here because it's under the gift aid scheme. So it would be your national charity that we're going to claim relief for. So we're going to deduct the 600. So total taxable profit is going to be 1,282,012, and the tax will just be calculated by multiplying it by 19%. And that gives me 243,582. Last bit of the question, it asks you how you're going to pay the tax. Now, to work out how it's going to be paid, then you have to work out the augmented profit. So you need to add to it the franked investment income, which is your dividends received from UK companies. So up here, we've got some dividends received of 200,000, which are going to get added to that. Okay, and that will then give me a profit of 1,482,012, and that is the figure that we're going to use to test the company size. Now here, this is less than 1.5 million, so it's not initially looking at it as a large company. What we must check is to see if they're part of a group, and it says here nothing mentioned there. So I'll read down the bottom, see if it tells us anything. No, doesn't mention anywhere it's part of a group. It does say it was a large company last year. All right, so last year it was large, but it looks like this year that it isn't. And companies can move in and out of being large because obviously it depends on their profitability. So they could get away this year because it's not large of paying 9 months and 1 day. However, if you've got a business that's normally become a large company, unless they expect this to be a permanent fall, they would fall into the instalment payments. So if large, they pay in instalments. Now, the way that this works is you look at your accounting period, which in this question, their accounts are running to March 20. So 1st of April 19 to the 31st of March 20. And the payments are made in months 7 and 10 during the period, and 1 and 4 after the period. So what you actually have to do is count 7 months from when the account started. So April, May, June, July, August, September, October. And the payment is made on the 14th of that month. Carry on to month 10. November, December, January. So you make another payment in January. 3 months later, 14th of April. 3 months later, 14th of July. So every 3 months, you're making a payment if you go through this instalment system. All right, so generally, once you're large and you're paying instalments, you carry on doing that unless you think it's a permanent fall in your profits. Now, if they pay instalments, what they would do is they would take the liability, so corporation tax due, we've got up here is 243,582. And we would divide that by 4. And that gives us 60,895,896, depending on how you round it. So that's how much they pay in each of these quarters. Obviously, the problem you've got is that you're making payments before the year's ended. Therefore, you don't know what the profit's going to be, let alone what the tax is going to be in October. So you would have to predict it. But we won't ask you to do that in the exam. We'll just ask you to say, when would you pay it? And what would it be based on what your figures have been in your calculations?